There are so many bigger items going on in this economy, the tariffs, immigration, frankly, a whole attack on science funding, a lot of things that are going to, I think, hurt long-term economic growth. And that's why I joined Simon Johnson and other colleagues from the Center of Economic Policy Research to do a book, a rapid response book about the economic consequences. But in that book, you're asking about stable coins. It's interesting. The worldwide dollar market's about $45 trillion. That's when you add everything up, $45 trillion and stable coins are about $250 trillion. And so, the question is Scott Bessent, Secretary of Treasury, right? He says that's going to grow to $2 trillion. It starts to say, what's the use of one of these? We already have digital dollars. You and I, Lisa earlier was saying, I don't understand stable coins. We have stable coins. They're called U.S. dollars, deposits, money market funds, and so forth. The only thing that these companies are offering is an alternative way to move dollars outside of the banking system, which means outside of sanctions, outside of any money laundering laws. And so that's the real risk. It could undermine the U.S. geopolitically.
Okay. Paul's got 8 questions. Let me get this in right now because I think it's so important. The bravest book in my career here was Ken Rogoff, The Curse of Cash. He got death threats off that book. It's nothing more than a use for criminal activity. It replaces illegal $100 bills in briefcases. How simplistic is that statement that I just made?
Well, you're talking about these stable coins?
Tether, stablecoin, the whole thing. It's nothing more than a walk around the SEC and the rest of the financial world.
Look, stable coins, Tether, was invented early on, about 10, 11 years ago, to be the equivalent of the poker chip at the casino. You could use it to move crypto versus crypto because these large exchanges couldn't get bank accounts. And so instead, you could sidestep any money laundering and sanctions. At $250 billion, it's starting to be somewhat meaningful. And here's the cool question, the interesting economic question. Who gets the interest payments? Who gets the float, the 3.5% or 4% on for every $1 billion, that's $35 or $40 million of interest. And who gets that interest? I'd rather have a money market fund where I get the interest, the investor.
Gary, the economic consequences of a second Trump administration, a preliminary assessment. We're 6 months into the second administration of President Trump. There's lots of unique economic policies coming out of Washington. Let's start with tariffs. When I was in business school, tariffs were kind of a targeted thing you do once in a while if somebody was dumping steel or something else in there. We've never really seen them as a whole policy across the globe, across all of our trading partners. How do you think about the President Trump's economic policies focusing on tariffs?
I think, and thank you for mentioning this book that we did together. And it was a rapid response book, but overall, all our experts said tariffs are going to put downward pressure on economic growth and upward pressure on inflation. And that's the history of these things. We have seen worldwide movements to tariffs, and it was right before the 1930s Great Depression, and Congress got in and weighed in and so forth. And I would remind listeners that tariffs are only on goods, not on services. And about 90% of workers in the U.S. are working outside of the manufacturing field. And one of our authors, Michael Strain, wrote an excellent chapter. And Michael says it won't even help manufacturing because manufacturers have to buy all these goods, these intermediate goods from overseas, and the tariffs will be higher. So I don't think the tariffs are going to help. I think they're going to hurt. And interestingly, they're going to particularly hurt also in rural communities, because rural communities have to sell their farm goods, their agricultural products overseas. So it doesn't even necessarily help the president and some of his political base in rural states.
I'm just going to, preempt a lot of email I'm going to get today in my social saying, we haven't seen any of it. Tariffs are working just fine. Inflation's not there, or is it just too early?
So it's a bit early, but I'd say this to any listeners. You've just had the largest tax increase that you've had in generations. Average tariffs in the U.S. were 2.3%. globally, adding everything up, 2.3%. And that was even after the first Trump administration raised tariffs on China. They are now over 10%. So the overall tariff rates have gone up fourfold. That's a big tax increase. It takes time, but the International Monetary Fund lowered our growth estimates for this year a full point. So, we're seeing that happen.
Right. I've got to ask, we got all sorts of topics to talk to with Gary Gensler, former Securities and Exchange Commission chairman at MIT, out with a wonderful, what do you call it, like a Kindle book? Is there like a...
Well, it's a real book. We do have it physically, but it's online at the Center for Economic Policy Research, which is a remarkable organization in Europe, and you can get it for free right at the CEPR website.